I will start my questions from the regulators, and then I'll come to the industry interface people. To start with, let me start with the Institute of Chartered Accountants Ghana, where I belong as well. And I'd like to ask Madam President what some initiatives there are taken by the ICAG, or what emerging issues industry should know. And if you can point my participants here to some sources they can find additional information on what you are doing as an issue, as far as ESG or sustainability reporting is concerned. Madam President.
Good evening, ladies and gentlemen, and thank you, Francis. We have recently been working on a number of things relating to ESG, but the most high priority for Ghana and for ICAG is the International Financial Reporting Standards S1, S2. These two standards were launched last year, 26th June 2023, by the International Sustainability Standards Board. And this group is a part of the IFRS Foundation, which is the body that had been given the authority at Glasgow in November 2022 to ensure that the fragmented reporting guidelines and information requirements on businesses are harmonized into a standard that will make it easier for companies and businesses to still report, but have it done smoothly. So a lot of businesses have had reporting requirements which have had their sources from different authorities, but with the support from G7, G20 at COP26, the world bodies really saw the need that all the little requirements were too many. So why don't we put it together so that when a company is reporting one mandatory information, which is usually the financial statements, which is a requirement by many organizations or all organizations which are registered under certain regulatory regimes, becomes part of the sustainability reporting rather than having a separate report for sustainability reporting and then that's for financial statements. Wow. So what Ghana did at that time was to follow through, and when the first exposure draft came out, we supported and made our contributions. We also were part of the launch and made a press statement on the day of the launch on that 26th June. Thereafter, we had a steering committee set up with representations from Bank of Ghana, Ghana Stock Exchange, and many of the other key players within the sectors that have to be considered as high public interest institutions. So we brought this group together, and the group became the working group, or the national working group for ISB in Ghana, who are in charge of implementing or adopting implementation of the IFRS S1, S2. What's important for us to note is that the Companies Act, Section 127, provides that any standard for financial reporting standard that has been adopted by ICA Ghana should be mandatory or should be applied to all organizations, meaning there is no other regulator that directs, approves the use and implementation of standards. So if ICA Ghana positioned itself to play this role, then it became very significant for all businesses. ICA Ghana could not have done it by itself, so it formed three groups within the steering committee. There is the stakeholder subcommittee that is having continuous engagement with all stakeholders, industry associations, academia, civil society, regulators, and so on and so forth. In addition, we have the communication subcommittee, who are also in charge of the awareness creation bit and also channeling the events that accompany some of the sustainability roadmap that we have. The last group, which is the technical group, are in charge of the research, developing the roadmap, and many other technical things that ISSB may be issuing. Thankfully, at the moment, we have a roadmap which has been approved by ICA Ghana, and all companies, all businesses, all regulators would have to take note of this roadmap. At maybe another time I will come in again.
Thank you very much, Madam President. That's very insightful. So a new standard is here. All businesses are required to comply. That moves me to Bank of Ghana. Madam President spoke about fragmented kind of reporting. We know one of the source of those fragmentation is industry-specific disclosure requirements. And having IFRS S1 and S2 in mind, are you able to share with us what BOG is doing as far as ESG is concerned, as far as your institution that you regulate is concerned?
Thank you, Chair. And good afternoon, ladies and gentlemen. I want to touch on from, probably let me start with the SBPs that we issue in 2019. As regulators of the...
Apologies, SBPs means
Sustainable Banking Principles. Of course, I will try to define that. Now, as regulators of the banking system, as you know, we are to ensure safety and soundness of the financial system, of course, the banking system in Ghana, and it also contribute to the stability of the financial system broadly. Now, in respect of ESG, we realize that, of course, we do appreciate the opportunity and the risks it does present to the system, and then they need to really design regulations, appropriate regulations to see to it management, and of course, to ensure that the banks are really safe. So from 2014, we started this work. In 2019, His Excellency, the President, and then the Governor launched 7 principles for implementation. And these principles broadly cover the 3 elements of sustainability, which is the environment, the social, and then the governance. Of course, the environment, we focus more on that financial institutions will identify and manage the environmental issues, risks. And then we did gender inclusion for the social side, financial inclusion. And then, of course, we also look at reporting and then resource efficiency. Now, we started implementation from 2020. We do see progress that we have made. Within that designing of that policy, we really focus on disclosure of the sustainability elements. Of course, that time, what the IC agent just said had not come, what the X1 and S2 had not come. So we had to look at the broad principles that we had designed to design specific questions that we do expect the financial institutions to disclose in the audited financial statements. Now, 5 years down the line, of course, we've seen that they have made a lot of progress. Currently, if you really look at the data, the financial institutions are around 62.5% in respect of implementation, which is good. Now, what we are focusing more now, if you look at our strategic plan that we have designed, is to focus more on the climate change. So now we have also designing a whole directive. Thankfully, just last week, the governor approved the exposure draft, which by next week, we should see it on our website for public comment, and of course, for all stakeholders' comment, and then of course, for streamlining, and then issuing the final document. I'm sure by 3rd quarter of this year, we should issue the final document. Now, that is where we are focusing now, which is very key for us. Of course, as an update, you will see that document soon for your comment. Now, also, I want to touch on the Sustainable Finance Roadmap, which we are looking at. We want within the financial system all the key stakeholders, in respect of the regulatory bodies, the regulators within the financial system, to have a common Sustainable Finance Roadmap. So, Bank of Ghana will design a roadmap for the banking sector. SEC will design a roadmap for the Security and Exchange Commission. The NIC will design a roadmap, and of course, NPRA. Then we'll consolidate all these roadmaps to have a common roadmap, which will guide specific regulators within the industry or within the system, going forward. So that is something also that we are looking at. Thankfully, when we met, we had a meeting, the first meeting, stakeholder engagement last year. I think the IC and the key stakeholders were there. the Bank of Ghana was chosen as an entity to be the coordinating entity, or as an institution. Thankfully, the governor had approved the terms of reference that we were tasked to design, so that also will be shared with stakeholders, and then we will set up a steering committee that will look at the development of the sustainable finance roadmap. So that is something that members should look out for coming days. Yeah, I think maybe later on we'll touch on a few.
We'll touch on a few things more. Thank you very much. So I've already heard IFRS S1, S2. These are reporting standards. I've already heard sustainable banking principles, and I've just heard common sustainable financing roadmap by all FI regulatory bodies. That takes me to SEC. You are where the money is, where the investors bring in the money. Are there any specific things you're doing at SEC that businesses and investors alike should be aware of, briefly?
Okay, thank you. I think I'll just continue from where my fellow regulators left off. I mean, prior to the S1, S2, we passed our capital market master plan, which incorporated, with 4 key pillars, which incorporated sustainable development goals in all the pillars. And sustainability has been something that the Commission takes very seriously, and we heavily supported the Ghana Stock Exchange to pass the ESG disclosure guidance manual to guide the issuers to report on, their sustainability activities and the impact that they are having. So, and that was based on the GRI, that's the Global Reporting Initiative standards, for them to be able to have some international best practices to guide them. However, with the onset of the S1 and S2, that's the IFRS S1 and S2, the Commission has again taken keen interest. The past couple of months, we have been deep diving into the key requirements to see how we can support the ICA for, as soon as possible, the issuers to comply. Of course, the implementation starts from this year, and we're working with them to make sure that the issuers, as soon as possible, can also adopt them. Beyond that, we also have partnered with the Sustainable Banking and Finance Network, that is the SBFN, to build capacity in the area of sustainability, to be able to ensure that our policy decisions and actions are in line with international best practices, and that our issuers are able to easily go through this without, significant impediment. We are very mindful of, in all of these, it comes with a heavy cost. Sometimes you have to recruit certain experts to come on board as you seek to implement some of these initiatives. And so we are working closely with the SBFN to make sure that, as issuers seek to do this, they are not heavily impacted by already, as you are aware, our market is very young. It's an emerging market, and we are struggling to get more companies to list on the stock markets. And so we have to, balance regulation with market development to ensure that, the intended outcomes are achieved.
Awesome. Thank you very much. This is very helpful. So these are some of the things coming up from the regulator's side. I'd mentioned what had been mentioned earlier. What I've heard new is the ESG disclosure guideline manual by the Ghana Stock Exchange. I've heard about the capital market master plan. I've also heard about the Sustainable Banking and Finance Network. I'll come back to you when we are closing to share with us sources where our participant can get more information, and if they need to do follow-ups, where they can do those follow-ups. But let me come back to industry, starting with the man who bridges industry and regulators, sort of, where he says sometimes they are dealing with the Minerals Commission as regulators, other times they themselves are behaving like they are regulators, other times they are behaving like they are industry, and all of that. let me ask you, my good friend Simon, from where you sit, having heard what these regulators, and I'm saying these regulators because they bring us a lot of regulation and they want us to follow. You sit in a mining company, and you've worked with a lot of mining companies. You know what is going on in the mining sector. What are some of the things your businesses that you work with, those who are in the chamber, what are some of the things they're already doing? And then how do you see these regulations impact on the businesses of mining companies, for example? Should mining companies be happy with what Madam Sena and the colleagues here are doing, or they should be worried?
Thank you, Francis. So from the perspective of the Chamber of Mines, most of our members, as you probably know, are already listed. They are not directly listed, but generally their parent companies are listed on the various stock exchanges. And as you can imagine, there are lots of initiatives that start coming up, and they usually will start in the West. And if you don't get on the bandwagon, sooner or later, you'll be forced to. So generally, the boards start giving the direction so that we start complying with some of the initiatives, even when they are not mandatory. So we talk about things like the GRI reporting. Most of the mines have been reporting on that for the last 5 years, and some even beyond that. With the ESG, we've seen it coming, and there are actually some of, I believe most of the boards have subcommittees at the board level that are ESG focused, with a lead director championing the ESG initiative. So we are generally ahead of the curve, and it's only good, in my view, that now IFRS has brought it, or has introduced S1 and S2 into the financial statements reporting. It gives us a uniform and a standard way of reporting on these items, and thanks to our big four firms and other auditors who are available. Generally, the big four audit the big mines. Compliance should be smooth, because they would come up with the illustratives to make it easier for us to comply. So we are not perturbed by these standards. We welcome them. We have complied even when they were voluntary, and we will continue to comply with them. And,
awesome.
and they are
Simon,
good things.
thank you very much. That's very reassuring. I'll come to Alice. Alice, you sit as a partner with one of the big four, Ernst & Young, and you look at transactions. You see how merger deals are structured. If you are anywhere in Africa and you're going into a merger with a business that is in the western side of the world, you most likely will have ESG issues coming up in the term sheets and all of that. Having heard what the regulators are doing, do you think it will put more stress on businesses? Should businesses be excited about it? Or what exactly do you think the outcome or the outlook is like for businesses?
Thank you very much, Francis. As the regulators rightly indicated, and based on the initiatives they've put in place, ESG or sustainability is no longer a buzzword. You know, it has become a potent force in business, and it really fits into the overall strategy of what every business does, most especially for businesses looking for funding. So it has created opportunities, you know. Businesses should rather be excited, you know, because they should look at the long-term value. You're looking at your ways of operating and its impact on environment, so that you'll be able to create the growth without, you know, making it difficult for future generations to continue. So as you seek these impact funds or investments, we should make sure that they align with the sustainability principles. And based on what SEC and other regulators are doing, there's so much opportunities, even locally. When we look at the guidance on, you know, green bonds, there's opportunity to raise impact funds on the stock exchange for green bonds. So they have 4 main criteria: sustainability bonds, sustainability-linked bonds, and sustainability-themed bonds. So all these 4 have specific requirements that businesses can use. And just this month, early this month, the stock exchange also launched the commercial paper, whereby you can also raise short-term funds right from 15 days to 270 days maturity. So that opportunity is also there. And one key thing is that businesses should be excited by incorporating ESG is the impact on value. ESG impact on business valuation. I'm a business valuation expert, so ESG, we cannot talk about ESG without the attendant impact on the business value. Because if you are valuing maybe for time's sake, even if you are using your income approach, using DCF, because you have ESG principles embedded in your operations, your discount factor is adjusted. If you're also looking at your market comparables, either you are using your EBITDA multiples, your price to book, price to earnings, etc., you make premiums, adjustments for a company that is aligned with sustainability principles, as against one that is not, that you apply a discount. So there's so much, excitement, that businesses should look at based on all these sustainability principles, being it S1, S2. Now it's more aligned because we had a lot of standards that people were using, but now you are going to report under one, and it will really help in the growth and long-term value of that business.
Awesome. Thank you very much, Alice. And I'll come to you, Mami Tutua. You are from the lawyer's side, and I know you do look at a number of term sheets, and one of the things you find on term sheets are what we call condition precedents. And in time past, we've seen conditions on governance, conditions on financial management systems, internal controls, and what have you. Are you seeing anything in the areas of ESG nowadays, for which reason all the issues that the regulators are talking about, whether we should be worried or not worried? What do you think?
I think previously for companies, a lot of my clients in the financial services, they saw it coming, and I think that they're most prepared for it. But for the other companies, smaller companies that are not within the financial services, the ESG has always been a problem for other companies in the extractive industry, in the environmentally sensitive industries. So they haven't really didn't see this coming. And I think that they should realize, and for us as practitioners, we need to let them understand the long-term value creation that this is going to bring, and then also that it's going to strengthen their stakeholder engagement. It's also going to make it easier for them to have access to capital. And I think that with all these, even in terms of their reputation, companies that have the sustainability principles embedded in them are companies that are more attractive. Everybody wants to be associated with them. And for investee companies of the funds that I advise, I think that they would have to welcome this with open arms, because the longevity of their business, the ability to scale will all depend on how well they assimilate these sustainability principles. So yes, it's something that should be exciting for companies, and for a lot of them, in the initial stages, they would complain. But I think that when they realize that it will help, especially even improving their risk management and their ability to perform in the long term, and their resilience, and also help in the long-term longevity of the business, they would realize that it's something that they have to embrace. And it's something that has come to stay. And I think that, the Companies Act requires that they'll follow it anyway. Yeah. So it's time, I think, that we have some capacity building so that companies will be ready, well, at least the professionals that are going to support them in this journey will be ready to hold their hand through it.
Awesome. But yeah. Mami, let me pick this next round of questions with you. Okay. And for most of the people here, the arguments that have been made for this so-called ESG, and I've heard you mention it, I've heard Alice mention it, has to do with access to capital. There's a whole argument that, if you are ESG compliant, you have access to money. Sometimes it's even presented as though there's free money sitting somewhere, so long as you are ESG compliant and all of that. Has the money been coming? Have you seen it? In the transactions you have advised, have you seen the money that is ESG tied Are there more money sitting somewhere that business will get if they get ESG compliant?
Well, in the plenary sessions that we've had the importance of impact investing. One of the funds that I advise is a climate fund. And so for that, the financing is available, and it's only available to companies that comply with these ESG requirements. So yes, impact matrix score higher for both equity and debt. So now, however you look at it, you need to align your company's goals with sustainability. Impact capital is flowing. And I advise a lot of them, impact capital is the best kind of capital. It's patient, it's available, but it's tied to certain requirements. And so yes, if you want to have access to them, you need to align it, and the capital will flow.
All right, thank you. So I'll come to BOG, and then I'll go to SEC, because you are the ones who have been looking at the monies. So you have to tell us where the money has been coming from, whether there's some coming from ESG. And then when I finish, I'll come to ICA to tell us what they are doing in terms of capacity building, because now the whole argument is sitting on your so-called S1 and S2. You are coming to worry us, so you have to tell us what you are doing to help build our capacity. Then I'll come to the last two panelists and ask where businesses should go from here. So Alice and Simon, get ready for me when I come back to you to have the final word. So let me go to BOG. Is there any impact fund sitting anywhere in BOG?
Yeah, for BOG, of course, no. But I think I want to take it from where she ended. The funds are there. I mean, if you look at the Global Climate Fund, the GCF, for instance, I think they've allocated about 1.26 billion for emerging economies. And if you check in Ghana here, EcoBank has been able to attract about 270 million, right? Of course, with the support of the Ministry of Finance and I think some consultants, they were able to meet the requirements. So the requirements are there. I mean, you just have the funds are there, but you need to meet those requirements to attract the funds. And of course, if you look at what BOG is doing, I mean, these are some of the things that are pinning our regulations and supervisions, just to ensure that we prepare the system. These funds move to areas where there is robust regulatory framework. So therefore, they should be within the prudential regulations that we come up with, and other supervisions, things that we do, of course, should be robust enough to attract the funds. So if you check the regulations and the principles that we have designed, the purpose is to really make the system very enabling. I mean, have a very enabling environment that will attract these funds. And I'm not surprised, of course, that the co-banks, but so the funds are there. It's up to the banks and all the interested parties to really work in meeting those requirements and just to attract the funds for businesses. Yeah.
Forgive me, because of time. John, in just a minute, has SEC seen any money, whether on Ghana Stock Exchange or the alternative exchange or the GIFIM? Is there any impact-related funds as far as the exchanges you regulate are concerned?
Of course. I think the key impediment was always being able to attract those monies. I mean, being able to also ensure that the monies are able to return to where they are coming from. And that was always the major issue. So what we have done is to create the enabling environment. A couple of months ago, we issued what you call the crowdfunding guidelines. Kojo mentioned it. I'm happy to state here that we have actually passed that guideline now. So applications are coming through. We had a couple of players who came to us, and we put them under our sandbox regime. But now we have actually passed the crowdfunding guidelines. And this has been in the offing for about 4 years now. We developed it, had a lot of stakeholder engagements, and somewhere along the line we thought that, this is after consulting countries like Malaysia, India, UK, Nigeria, so many countries, just to make sure that we do not stifle innovation. We encourage market development. So we still had to get a consultant to even look at it, to make sure that we are in line with international best practice. So we just passed it, and I can tell you that there are a lot of entities that are showing interest there. And we also just passed the Green Bond Guidelines, as Alice indicated, which, again, we know our pension funds are very much interested in. And so these are opportunities that SEC has made available to the market.
Awesome. Let me come to ICAG. Madam President, you've told us that you have brought us 2 new standards, and we must all comply. I am aware that you actually want us to comply effective this year. So financials that will be prepared end of this year will have to comply with the S1, S2. You cannot just throw standards at us and then expect us to comply. So is there anything that you are doing as far as ICAG is concerned to prepare us in terms of our capacity to be able to adopt these standards?
Thank you very much. First of all, it's not going to be mandatory to comply this year in Ghana as we have in our roadmap. We had 3 levels: voluntary, compliance, mandatory, and then we have the government assurance as well. For the voluntary, we have the listed companies who have already started working with the guidelines that were mentioned by the regulators here. And for the significant public interest entities, such as those in the mining sector, the oil sector, the pensions, and other key entities which we have classified, they are part of the voluntary complying group. They would have to do that voluntarily between now and 2026, end of 2026.
Madam President, just one clarity. The ones that are regulated, is it voluntary or mandatory?
From now, 2024 to 2026, it is voluntary for them.
Okay.
But effective 1st January 2027, it becomes mandatory. And that period becomes mandatory for significant public interest entities, as I mentioned. But for those that are doing it voluntarily, you will need to also do an assessment of your readiness, because we understand it's going to change a whole lot of things. Your software for your financial reporting may have to be modified. And we have the ISA 5000, which is the assurance bit, where your financial statements will be audited based on standards that require sustainability. For that reason, there is a lot of capacity building need, which we are working on seriously, but not alone. We've worked with ACCA in the last year. We are having a number of activities lined up with them, which is meant to build capacity. PAFA, the Pan-African Federation of Accountants, the ISSB itself is a body we are working directly with, and we are part of the African champions on the IFRS S1 and S2, because at the moment there are only 3 countries that have really adopted and have a roadmap ready to roll. So,
President, you mean 3 countries in Africa?
In Africa, okay. That's Nigeria, Ghana, and Tanzania.
Okay.
And the other countries, Kenya, South Africa, are working on their roadmap. They are working to get the adoption. But Ghana, we have a unique system where the ICA Ghana, being a regulator, is really positioned by law to do the adoption, and so we've had it easier to get it done. The roadmap will have to be understood by SMEs. That's where the challenge comes. The SMEs, and because the capacity building is not only for the big firms who can really afford changing their software for financial reporting, the SMEs also need to also unlock capital. And so that's where the challenge is, and probably we need to collaborate with some agencies, including some organizations here, who would support to make an impact on the SMEs and some of the other institutions that are relevant.
Thank you, Madam President. Now let me give the final words to the gentleman and the lady. So let me start with you, Simone. Where do mining companies go from here for all that you heard? How should they position themselves in just 1 minute? Where do you go from here?
We will be part of the voluntary, and like I said, most of us are audited by the Big Four, and so we would probably be part of the guinea pigs for this, and we would comply because we see the benefits. It has impact on our investment community and how we access funds from the capital markets.
Awesome. So Alice, he keeps referring to you, Big Four. You are Big Four, EY. Yeah. So what will you tell the businesses you audit as far as all the issues we've had, BOG, SEC, and all the ones that have come up? What will you tell them as far as going forward?
All right, thank you. So 3 main things. 1, to assess where they are at in their sustainability journey is very key. And to also reach out to professionals to really help them support, upskill capacity building has been running through most of the submissions. So capacity building for key staff, for management, those charged with governance, very key. And in terms of what EY is doing, so EY and the other big four, we have entered an initiative with BII under their Ghana Investment Support Program, where we have discounted rates for SMEs, in terms of upskilling, in terms of support on sustainability, business valuation, and all those preparing to raise capital. It's very important you factor in all the ESG requirements right from start, because you will have all the key ticks in terms of financial, your due diligence, quality of earnings, quality of assets, quality of information, everything is fine. But when it comes to ESG, which is a key requirement, there may be a lot of issues. So that can be structured as condition precedent, as you indicated, and it can really elongate the transaction process. And can even result in an unsuccessful transaction close. Awesome. So it's very important that they assess where they are at, reach out to professionals. We have a special package to support, and they'll be able to achieve
Alice
their
will
objective.
come to you.
Thank
you. They will come to you
yes,
to,
we are
to
ready
support
to support. Yes.
So I promise them that we'll give them resources where they can find more information. So let me start from Madam President. Where can they find information on all this IFRS S1, S2, your trainings? Just briefly, second.
We have ICA Ghana website, and we also have the www.ifrs.org. That is where we can get resources. When you go to IFRS, you look out for the accounting standards, or you look out for ISSB, and you get a lot of resources that you can take away.
Thank you. You can equally just type IFRS S1, IFRS S1, IFRS S2, and you will find some useful information on those issues as well. BOG, where can they find information? Where do they see sustainable banking principles and all of those ones?
It's on the Bank of Ghana website. Okay. If you go to Google and you type Bank of Ghana, but of course you can also type www.bog.gov.gh. Now when you go to our website, there is a search engine there. You type in the Ghana Sustainable Banking Principles, or the proposed directive I've touched on. When you type the climate directive, you get them. We're going to also publish our strategic plan for the next 4 years.
Okay.
In respect of development around the climate, you will also see it and see where we're going. So if you want to partner, if any development partner want to partner Bank of Ghana to do any work in the area of the climate, they know exactly where we're going for the next 4 years.
Also,
we'll publish that also for information. So, but everything's on our website.
Right. I hope you are taking notes where to get the material. Finally, where do we get information from?
So simply SEC, as in Securities and Exchange Commission. So sec.gov.gh. Okay. You'll find all the resources there.